Okay, so we're going to go ahead and start our Q&A segment. Just bear with me as I go down the list. And again, gang, this is my request and my advice to get your question answered during our time here. If it's on point, I address them. If they're off point, getting us to other topics, I will not have the time to address them here in this forum, okay? So, in terms of trading type, I think this is a good question from Ben here. Okay, so what type of trader am I? I don't label myself as a trader. So now that we've talked about market cycles, I'm just a trader, right? I don't define, and here I think is a big mistake, and I'm so glad you asked this question, Ben. I don't define myself as a trader, because then that means I treat every market as a swing trade, or I treat every market as a momentum trade. I treat the market as it's asked to be treated. So that means there are times that I'll momentum trade, there are times that I'll swing trade. However, for those of you that have a preference for a particular market type, and you say, you know what, I like following a trend, or I like waiting for breakouts and breakdowns. Great. You've understood that that's the way you're wired, which is fantastic. And then you will use either some sort of combination of the initial trend on the PRS and the wave, or maybe you're just going to use the wave itself, and you'll find the best market environment for your preference of strategy. So personally, I don't define myself. I'm just a trader. The market will define how I'm going to treat it. If I'm swing trading, the word swing, let me define that real quick, because I think there's a lot of definitions running around out there, and I'm going to tell you what I call swing trading. Swing trading is waiting for corrections in the context of a trend. In other words, if the market is traveling up higher in an uptrend, I will wait for pullbacks, corrections, pullbacks in the uptrend to different support or resistance levels. They might be psychological levels, there might be Fibonacci levels, there might be the actual support of the wave. Okay, in a downtrend, I'm waiting for a bounce to any one of those levels. So swing trading to me is trend following, but I'm taking advantage of the corrections, the swings, if you will, hence swing trading. So the swings could be the corrections, the pullbacks, the bounces. That's what swing trading is to me. It is a trend following approach. So what do I need? I need that 12 to 2. I need that 4 to 6. I need that underlying trend, and I'm going to wait for the swings, the corrections. Momentum trading to me, by the way, then, is when the market has no trend, and I'm waiting for the momentum to reveal itself. So in a sideways accumulation market, when the trend is 3 o'clock, if the market direction is 3 o'clock based upon my wave assessment, what I'm waiting to do then is let the momentum reveal itself by either piercing the resistance of a downtrend line or piercing the support of an uptrend line, that triangle pattern or a rectangle pattern. So again, that's momentum. I'm waiting for the momentum to reveal itself. Okay? So I'm waiting for that type of price action in order to determine how I want to trade the market. Again, the market direction is going to dictate what I'm going to do next. All right? So thank you for that question, Ben. I think it was a great question for our discussion here today. And let me tackle a few more questions, and we'll take it from there. The indicator that I'm using, that we're talking about today, is the wave. You can set this up on your charts by going to Insert, Indicator, Trend, Moving Average. Okay, it's the 34 period exponential moving average on the high, and you do that once. Then you come back here. You put one on the close. Okay, and then you come back and do it on the low. So it's 3 different moving averages. Those are the settings. 34 period, exponential, and then one on the high, one on the low, and one on the close. Okay, the white line that you see going across my chart, by the way, is the 200 period simple moving average. Thank you for that question. It's the 200 period simple moving average. So thank you for that question, Joseph. The reason I watch the 200 period simple, it's neither a Fibonacci or anything like that, but you know, if something breaks a 200 period simple moving average, it's talked about, gosh, sometimes on television, you'll see it in the forums, you'll hear people talk about it in chats, all sorts of stuff. Okay? Another really popular one is the 50 period simple. In fact, when the 50 period crosses the 200, you'll hear people refer to that as the golden cross. Okay? Again, sometimes tools are relevant and important because they're well followed. They're psychologically relevant. And therefore, there's a certain aspect of a self-fulfilling property to them. Okay? So that's something to think about. All right, so thanks for those questions there. All right, let me make my way down this list, and then we'll answer maybe a question or two more. Psychological levels. Psychological levels, I got a question here from Warren. Psychological levels are simply levels that I tend to find orders congregate at because they're whole round numbers. The double zeros, the 50 pips. You'll hear me refer to those as major psychological numbers. 20 and 80 I will refer to as minor psychological numbers. Again, they have to do more with the fact that they become support and resistance based upon the fact that they are whole round numbers, and because we tend to think in this manner of whole round numbers, these whole round even numbers, orders accumulate at these levels. And when orders are accumulating at a level, they create support and resistance. They create these decision levels on our charts. Whether prices have respected them as decision levels in the past is almost irrelevant. There tends to be a psychological reaction when prices trade at these levels. That's why I call them psychological levels. So again, double zeros, 50 pips are majors, the 20s and the 80s are minors. And I keep an eye on all of those as psychological levels. All right, so let's kind of segue into our second half of our presentation.